Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company is really making dough or just blowing smoke. Today we are looking at a filing from PMGC Holdings Incorporated, and let me tell you, it's got some interesting moves. Before we dive in, if you love getting the real story behind corporate filings without all the jargon, hit that subscribe button. And for more direct chats and insights, join our Discord server. The link is in the description below. Alright, so what we have here is what's called a Form 8K filing. Think of it like an important news bulletin from a company. This one is all about a new deal they made. The company in question is PMGC Holdings Incorporated. They are involved in something in the stock market, and this report tells us about a financial agreement they entered into. This company is incorporated in Nevada, which is pretty common for many businesses. Their stock trades on the NASDAQ under the ticker symbol ELAB, and they are identifying as an emerging growth company. This means they are a smaller public company and get some benefits when it comes to following certain financial reporting rules. The main event here is a new financing agreement. It's essentially a prepaid purchase deal. They previously had an equity purchase facility, and this is like a second phase of that. So, what does that mean in plain English? They received money up front, but they discounted the amount they actually got. Imagine buying something for full price, but you only pay a little less than the sticker price. They were supposed to get a principal amount of over $3.2 million, but they took a discount of almost $280,000. This means that on the 7th of January of 2026, they actually got $3 million in cash. This difference, that discount, is a way for the investor to get a better return. It's like buying a bond at a discount. This deal is set to mature in January of 2029, so it's a 3-year agreement. Now, this $3 million isn't pure profit. They had to pay fees to their placement agent, Univest Securities Incorporated, and also legal fees. After all that, they walked away with a little over $2.7 million. So, while they raised $3 million on paper, their actual cash in hand was less. This is typical in these types of deals where a financial middleman or agent is involved, and lawyers have to make sure everything is above board. Here is where things get interesting and a bit complex. The investor who gave them the money now has the option to convert their investment back into company stock. They can decide to buy shares from PMGC Holdings Incorporated at a specific price. This price is based on 88% of the average stock price over a 10-day period. This is often called a discount to market. So why would they do this? Well, this gives the investor a way to get their money back and potentially make a profit if the company's stock price goes up. However, TRE is a very important limit. This investor can't end up owning more than 9.99% of the company's stock. This is a common clause to prevent the investor from taking over the company through this type of financing. This is a really critical number to watch for PMGC Holdings. If the investor starts to approach this limit, it could signal that they are looking to exit their position, or that they have concerns about the company's future stock performance. The company itself has an option too. They can choose to pay back this money early, but here is the catch: if they pay it back early, they have to pay a premium. This means they have to pay back 120% of whatever they still owe. So for every dollar they repay early, they have to pay an extra 20 cents. This is a pretty steep penalty and suggests the company might be hesitant to use this option unless they absolutely have to or see a huge opportunity. Now, let's talk about default. If certain bad things happen, the investor can demand their money back immediately. What constitutes an event of default? It's pretty broad. Failing to pay money back is obvious, but it also includes things like a receiver being appointed over the company or its assets, or if the company becomes insolvent or can't pay its debts. These are all really serious red flags. Filing for bankruptcy or even having bankruptcy proceedings started against you are also default events. This means they have to follow the rules laid out in the original purchase agreement. If they mess up on certain promises made there, it is a default. A fundamental transaction is also a trigger unless it doesn't involve a change of control. Basically, a significant change in ownership or control of the company. This gives the investor some say in major company changes. If a large judgment is made against the company over $1 million and it's not dealt with in 20 days, that is also a default. This shows how much the investor is trying to protect their investment. This one is a bit technical but important. DWAC eligibility refers to the company's ability to have its shares cleared and settled through the Depository Trust Company's automated customer account transfer service. If they're not eligible, it can make trading their shares difficult, and that's a problem. Basically, if the company breaks any material promise in this current agreement or any other related deal, it's a default. And if they lied or misrepresented something when they made the deal, the investor can call that a default too. It's a comprehensive list designed to protect the investor. This refers to a registration statement, which is a document filed with the SEC to register securities for sale. If that statement becomes unavailable for a significant period, it is a default. This is crucial because it affects the investor's ability to sell the shares they might receive. The actual legal document detailing this agreement is filed as an exhibit, Exhibit 10.1. This is where all the nitty-gritty legal language is. And that's about it for the main story in this filing. They've listed the exhibits, including that legal document. The important exhibit here is Exhibit 10.1. which is the form of purchase agreement. And the final exhibit is the cover page interactive data file, which is just for digital filing purposes. The report is signed by Graydon Bensler, who is both the Chief Executive Officer and Chief Financial Officer. Having one person in both roles can sometimes be efficient, but it can also indicate a smaller team or a company under pressure. So what does this all mean for PMGC Holdings Incorporated? On one hand, they've secured funding, which is essential for any growing company. They got $3 million to work with. But on the other hand, this type of financing often comes with significant strings attached. The investor has gained a lot of control and leverage. The 9.99% ownership cap is a key indicator here. If the investor starts hitting that limit, it is a signal to pay close attention. The strict default clauses also mean that the company must be extremely careful to avoid any missteps. They are operating under a cloud of potential immediate repayment if things go south. Looking at this from a Warren Buffett perspective, we're not seeing traditional equity from strong institutions. This looks more like a debt. Like instrument with an equity kicker, often used when a company might be finding it harder to raise capital through more conventional means. The discount and the accelerated repayment penalty suggest the investor believes there is a good chance of a significant upside or that the risk is substantial. The company's direction here seems to be focused on short-term funding to keep operations going or to pursue an opportunity, rather than building long-term stable shareholder value through traditional means. The major risk is if the company cannot execute its business plan effectively, leading to a default and a forced repayment that could cripple the company. Alright, that is our breakdown of PMGC Holdings Incorporated's latest filing. What do you think about this financing deal? Does it signal strength or weakness for the company? Drop your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more in-depth dives into corporate filings. And don't forget to join our Discord community for more discussions and direct access. Thanks for watching. See you next time.